The world is never going to be the same again.
I'm worried about the world.
The mass chaos and crises that there was in the world, it's going to be just like that now.
This is not an accident.
How long is it going to last? Longer than even for those of you that have some cash in the bank, way past your cash reserves.
Out of 100 people, 4 will get the message.
This thing isn't going to be over in a few weeks. This thing isn't going to be over in a few months.
And welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani. If Bitcoin is digital gold, well, why isn't gold like a physical Bitcoin? Let's talk gold with two of the world's great authorities on gold. George Milling Stanley is the chief gold strategist at State Street Global Advisors. He oversees the Spider Gold Trust. Gold Shares, GLD, that's the world's largest gold ETF. Will Rind is the founder and CEO of Granite Shares, which oversees the Granite Shares Gold Shares. That's BAR symbol. George, I know gold is considered a hedge against inflation, but if that's the case, tell me why gold isn't higher this year. People have been asking me this. We're now seeing notable inflation, but gold is down this year and about where it was 10 years ago.
Bob, I think that the truth about gold's relationship with inflation needs to be kind of carefully phrased here. Gold is a very good preserver of purchasing power during periods of sustained high inflation, such as we had during the 1970s, for example. What we have right now, when inflation has been above 5% a year for a period of months or years, as it was in the 70s, then gold has given you capital appreciation equivalent to 16% a year. So a real rate of return of better than 10%. That's really pretty good for an asset that doesn't have a yield. What we have right now, we've had inflation around 5% for 3 or 4 months, and everybody in authority, Mr. Powell, Mrs. Yellen, all telling us that it's transitory, it's not going to last. So I'm not at all surprised that gold has not responded more to the inflationary numbers we're seeing right now. We'd need those numbers for a lot longer period before we get a meaningful response in the gold price.
And Will, can you follow up on that a bit? It is possible gold is also bought for reasons other than inflation. There's all sorts of reasons to buy gold at this point, not just inflation, right?
Yeah, that's absolutely right. I mean, there are a number of ways, a number of reasons to buy gold. But just to riff off of what George just said, I think, put simply, the market doesn't believe we have an inflation problem at the moment. And I think you're only going to see a big response from gold at the point where we acknowledge there is a problem with inflation. And at that point, then the list of places to hide, so to speak, will not be very large. And gold is certainly going to be one of those places that people go to. But I think at the moment, the reason why gold isn't materially higher, despite the fact that we have high inflation numbers, the highest numbers that we've got since the 70s, is the fact that we don't have a problem in the official eyes of the Federal Reserve and other market commentators. That is the reason why we can still have stock markets at all-time highs.
Yeah. Will, I want to pick up on this digital gold idea. It's commonly said Bitcoin is digital gold, but is it, or is that just some phrase that we've all adopted now and sort of half believe? Is it really a threat to gold? And is there any evidence that gold, that Bitcoin is taking or siphoning investment dollars away from gold?
It's really difficult to say, to your point about the evidence of that. I mean, for sure, of course, with the market cap of Bitcoin and other cryptocurrencies, absolutely they are attracting capital. They're attracting lots of capital. To the extent that they're attracting capital away from the gold market, though, I don't know. I'm sure there's some of that going on, but I don't think it's perhaps as big as some of the commentators might say. To me, it's two very different states. The reason why people are buying Bitcoin and cryptocurrencies at the moment is highly speculative. That's a complete risk-on situation. And you can see that where you have the big drops, obviously in those cryptocurrencies, volatility spikes, it's less defensive in my mind. The reason why people are buying gold at this point is much more defensive. It's around the inflation story. It's around the long-term preservation of capital and purchasing power. And to me, those are just fundamentally different states right now.
Yeah. George, I think, he's onto something, Will, here. I mean, Gold is bought to reduce risk, isn't it? I mean, it seems like crypto is a big risk. Crypto is how many times more volatile than gold is? 5, 6, 7, 8 times. In terms of volatility, it's a completely different asset class, right?
Completely different. I think Will's put his finger on part of the big difference here between the two, and the reason why I think it is quite possible for these two assets to coexist quite happily in the market, because they do completely different jobs. If you think about it, the contribution that cryptocurrencies, just to finish your question, we've had Bitcoin for about 12 years, and over that period, it has been almost 10 times more volatile than gold. And you and I have both heard over the years people complaining that gold's a volatile asset. Well, cryptos are much more volatile. But the contribution that cryptos make to portfolio performance is entirely based on their returns. And as we all know, returns can be positive, which is wonderful, or they can be negative, which isn't so good. The historical promise of gold to investors has always been twofold. One, that over the long term, and I stress this, over the long term, gold can improve your returns, and it can also help to reduce your volatility. Cryptos, as I say, are increasing the volatility. So gold can actually make a contribution toward improving the Sharpe ratio of a portfolio, which obviously has to be the holy grail of any asset allocator.
Yeah, and the Sharpe ratio, of course, is how well that asset or that stock or asset does compared to the overall market. George, bring us up to
date on global. Does it improve the risk-adjusted returns, Bob?
Right, risk-adjusted. Thank you. Yes, risk-adjusted is correct.